Hey guys, Youth Fields here. Today we're going to be going over the weekly portfolio performance. So yeah, starting off, I'd like to start with the heat map, and you can see here this is the heat map of the S&P 500 and returns for the last 1 week. And yeah, I'd say it's mostly green. There's definitely some sectors that are not too hot, and more. There's a few of these you know uh, stocks that didn't do too well either, and that main reason I think is because there were quite a bit of earnings this last week. So this is, I think, Intel. That really sucks. This has been a very trash stock for like the last um, 5 years. They've been falling behind, but anyways. Yeah, so and I'll get into the earnings thing because we were unfortunately affected by one of those at least. So yeah. Anyhow, I'm gonna go into the portfolio tracker here. So if we start off, unfortunately, it wasn't a massive week for us. Like, I mean, we could see that the 7 day we're up 59 or 0.59%, which is decent, but honestly, it's not amazing. I just want to double check this and show you guys that the last week here we're up around that. So not amazing. And the main reason there is Composer. All of our portfolios went in. So our main portfolio, which is the Simon KMLM switcher, basically it went into Soxel, SOXL early, and unfortunately Soxel didn't do that good this week while I was in it, and then it went into some other stuff that also didn't do too hot. So overall, wasn't really a good week on Composer at all for any of our portfolio or any of our symphonies on there. But you can see though on our M1 Finance portfolio, we actually did beat SPY this week. If we had obviously fully gone into it, if M1 Finance was just our portfolio, is what I'm trying to say, we would have honestly been pretty good, in a pretty good spot. But unfortunately, it's not the case. So we are slightly behind on a total portfolio for the last for 30 days, and it hasn't been 90 days since I've been tracking, so that's kind of irrelevant. But you can see there that actually tracks the total. So you can see 6.99 compared to 7.21 right here on this. Actually, this is not accurate. Sorry, this is what I was talking about. So this total here, 4.46 compared to 6.97. But there was a lot of portfolio shifts and stuff. So I guess, if you want to count it, you can. But yeah. So going into each of the different, real quick, you can see the last 7 days here, negative almost 4% on Composer, up 1.59% on M1 Finance, and then up 8.87% on Webull, which, doesn't really matter a whole lot to me right now. But yeah, let's get into each of the portfolios here. So starting off with Webull, we can see here 179.57, so that's about $16 up from last week. Then we have this guy in M1 Finance. We basically can see here, if I come down here, make sure we have a week selected. I'm going to go down first with the bad ones, and the main one is ENPH, down 10%. Now, this is one of the tickers that I was talking about last week that I was thinking about getting rid of. What I didn't realize is, well, until it was the day, they had an earnings, right? And so I actually ended up listening to the earnings call, and I was unfortunately had seen that this was, it was too late, and this eventually just crashed. It was up 7%, around 7%, before the close, and then it dropped all of that 7% plus some, with the next open and close. So yeah, not too hot. I'm still thinking about getting rid of this, despite us being down, and I'll go into that in a second. But yeah, unfortunately, we were affected by that. And then utilities, we can see here, Next Era Energy was down 5%. Probably also an earnings call. I actually don't know. Let's see here. earnings? I'm not sure. Like earnings date. Does it say that? 3 days ago. Yeah, I don't know. I guess they're doing a quarterly dividend. Anyhow, there's that. So, in terms of the best performing portfolios or sectors, we have the semiconductors. AMD is honestly been amazing since we've held it. Up 6% this week, which is crazy to me. But yeah. Real estate, we can see here, pretty average across the board, which is very good. And healthcare, we can see that as well. United Healthcare, really the only outlier there, and that was the other one I'm thinking about getting rid of. And I'll jump into that real quick. Also, just to show there have been no dividends since last week. So yep. And then going into the unrealized gain, we can see we're down 20% on ENPH. So it's $100, which really does suck, and then also $155 on United Healthcare. But I'm thinking we just trim off the fat, take a loss there, and then just honestly swap those out for a shell for the energy company, and then there was another. It's blanking me right now for the healthcare sector, but I think those could do. I think we could do a lot better on those. And already unrealized gain from holding these. Technically, we started this somewhat back in March, I think, but I think we mostly converted everything over like in May. I don't remember. But 8.25% up $1,300, even with if we were to realize these losses, that's still pretty dang good in my opinion. So, yeah. Yeah. So let's go into the composer side real quick. So you can see here we have $4,069, and if we go, let's do. I don't know why it always does that. It's kind of annoying. 2025. Let's do July 20th. You can see if we take off total portfolio, it's probably easier. Well, I don't know. Yeah, you'll see. Basically, we had quite a big dip, so we were at 4,000 or 2,452, and unfortunately, it dropped down to 2,254. So we basically lost $200, and we're right around our net deposits on that. We're I think these ones all basically stayed around the same. We lost like 50 cents on that one. If I take off this, would that help? That did help a lot. You can see here, I think negative on all of them. But, we're talking about pennies, fortunately, but still negative. Now, I do want to talk about my greater plan for this portfolio. Also, one of which was I mentioned that I was going to drop one of the what was it? The 3x beefier. I dropped that in return for the not boring rising rates with vol switch. This is made by Waterman74. I believe that's what he goes by on the Discord for Investors Collaborative. Really cool Discord if you guys are interested in the algorithmic trading stuff. Also, if you're interested and you haven't signed up yet, feel free to use my invitation link or my invitation code in the description, or you can see it here. It will basically get me 25% off every month, as well as you for the rest of your time using the platform, which I think is pretty cool. So yeah. But the basic plan I have going forward is, first of all, diversify more. So I told myself that I wasn't going to, I've been basically up in the air about this Simon's KMLM switcher, and there's a few reasons why. One, this is a very, very, very volatile strategy. Yes, it has high returns in theory, but even, if we go max, this doesn't have a lot of data either, but if we come here and we look at the volatility on the standard deviation compared to something like SPY, it is astronomically high. I mean, 80% standard deviation, which is crazy. The max drawdown honestly isn't as bad as I thought it was going to be, but it's still higher than I'd like. And, you just see the 10x return basically, which is enticing, but it's too risky. I'd rather not have that much risk, because first of all, it's hard to stomach that. If, like, again, this week or last week, I was up $200 on this strategy alone, and now we're back down. We lost all of that, so it really does suck. So I'm gonna be selling this. I'm also gonna be selling this guy. Despite it going up, it's not the best performer, honestly. But I think the plan here is I'm gonna sell this, I'm gonna sell this, and I'm gonna grab um a total of 6 strategies, and I'm gonna try to put them about equal weight, right? So there's a few reasons why, there's a lot of statistics behind the scenes and metrics that I've been diving into. But basically, Ray Dalio, which is a very famous hedge fund manager, he basically um, he has this idea. He made a video about it. You can check it out. I think it's called like the Holy Grail by Ray Dalio. It's an Investopedia video. Great watch. But basically, he goes through and basically shows if you have I think it's like 15 plus uncorrelated assets, it reduces your potential risk by like a very high number, right? It's not a guarantee that you're going to not lose everything, hypothetically. But what it is a guarantee of is you're going to, again, if they're uncorrelated, one might go up, one might go down, right? That would be, if one goes up 3% and the other goes down 3%, that's inversely correlated, right? So it'd have like a -1, I believe, because it's a scalar. Or technically not, but anyways, the point is you're trying to get uncorrelated or semi-uncorrelated assets. In our case, they're not going to be assets. Well, they will technically, but they're going to be the symphonies, right? So basically, I have 6 strategies, and what I'm trying to do going forward, and this is something I've kind of thought about more recently, and the reason why is because Composer did a talk with a new hedge fund, and Enders Capital. Pretty cool people there, and they basically went over kind of what their guidelines are, or what they try to look for, because they use Composer, right? And one of the things that Moody, I believe he's the CEO, pointed out that they're trying to aim for is about 100% CAGR with a 5% drawdown. So that's what they're aiming for. They've accounted for like 10% drawdown with a 50% CAGR, which is still phenomenal. But I think I like that idea more. I think obviously we're not going to get a 10x return like this strategy here suggests that we could. But I think, first of all, it'd be a lot easier to go week by week and say, okay, well, yeah, our things only went down, 1% rather than like 20% or something like that, right? Plus, over the long term, it's just, well, if we do the strategy of the uncorrelated assets, we can also perform a lot better. So the reason this is literally 50% of our portfolio, which causes a lot of uproar when things don't go very smooth. And this, like I said, I just show you, it's very volatile. So yeah, it could make us a lot of money, but it could lose a lot of money, especially at a 50% allocation of our total portfolio on, or at least on Composer. That's just a bit much. So basically, I'm going to be picking 6 total. Again, I'm going to be keeping 4 corners, no leverage, and the not boring raising or rising rates with vol switch made by Waterman 74. And then I'll be collecting another 4 and basically putting equal money into those. So I think it's going to be around, well, it's 4,000 divided by 6. So, you do the math. I think it's like, what, 660 or something like that. I guess we can do that real quick. 4,000 divided by 6. Yeah, 660. 6, so well, that's ironic number, but basically from there, we're just trying to not touch it. The drawdown on the expected drawdown, I should say, is very low. And I'm talking very low. It's, I think, 50, or sorry, not 50, that would be very high. It's 5% based on the weightings. The volatility is somewhere in the ballpark of around 20. Well, no, it's actually, I think, less than 20, but it's around 20. And there's a lot of metrics to back it up, such as the Sorrentino ratio, the Sharpe ratio, as well as the Kalmar ratio. And there's this really cool tool that I'm going to show you real quick. On at least this is, I'll show you in a second, but this is probably what we're going to go into. So if I don't choose these, I just change my mind. Probably did some more research on them, but give me one sec. So using this cool site that's a member of that same Discord created, we can actually see some stuff here. So first of all, we have these 6 strategies here, right? So we have Combo 10, General, Frank's Roundhouse, Chicken and Fried Rice, version 0.08. I'm not going to name or say them all out loud or the full thing, but we have 5 Micro Regime. We have the not boring one that we already have in our portfolio. We have Auto Composer and Ensemble. We have Sisyphus, and we have 4 corners. Now, if we take all of these and weight them equally, so that's about 16.67 each, and we go to metrics, this is what we can see. So we have about 140% annualized return. Exponential annualized return is about 98%. Very good. The win rate is 65% almost. The max drawdown, which I'm very excited about, is 4.98%. The volatility is only 15.38%. And then there's some Kalmar, Sharpe, and Sorrentino. Or Sorrentino. I always say Sorrentino, but anyways. Another 2 metrics that you probably have not heard of before are the CARP ratio. So the CARP ratio is actually created by the person that made Maestro, which is Codernaut, I think. That's what he goes by. But essentially, you can learn about here. If I pull that up here, it's basically what I just said with the Ray Dalio thing. It's the Holy Grail. The idea is basically, risk diversification or lowering your risk through diversification. So you can see here how that really correlates. And yeah, this site's really cool because we can see all of the individual stats and how they do. You can see here like Sisyphus is driving probably most of our returns there, but also something like 4 corners has the least amount of volatility. Something like Auto Composer has the lowest drawdown, so on and so forth. So yeah, and then you can also see some other stuff such as return graphs. You can see rolling rate of return, rolling win rate, underwater plots. That's for drawdowns. You can see correlations, correlation matrix basically. In terms of returns, what are like days? Basically, how similar are days between these things? So you can see here, like this is one thing that I've been trying to squeeze down because a 0.728 or 26 correlation would indicate that it's pretty highly correlated. I'm aiming for about 0.5 on all of these, but we'll see. Which suggests that they're fairly neutral. It doesn't mean that they're like uncorrelated, and it doesn't mean that they're like identical. But yeah. We can also see here like rolling mean correlation, rolling CARP, which is the thing I just told. And then we can also see during drawdowns, that's how that performs. Rolling mean, drawdown correlation, rolling smart CARP. So this is factoring in volatility. Volatility as well. I'm not going to go on this one, but exposure is another interesting one. You can say each of the individuals ones, or you can do the portfolio equal weighted in our case, which you can come down here. You can see the underlying holding metrics. So basically what percentage of our returns came from this ticker. You can see the biggest one here would be TQQQ, which makes sense. and so on and so forth. There are some of here that don't even have data, which would indicate that those actually have not been traded, I believe. And then there's some that are uh, negative. I think that means like just how much the drawdown of whatever. My favorite thing here is as well, and by the way, these aren't super accurate because they're using different data sources and whatnot, but one of the cool things here is you can swap these columns, and you can get a day by day guesstimate, I guess, of what your strategy went into as well. So, for example, one of the things that I've been trying to look at recently was the number of days that I happened to be in, or what percentage my total portfolio on Composer was in some VIX like ticker, especially a short VIX. So you can see VIXY here, UVXY, VXX, UVIX, for example. If we add all of those up, it's around 50%, which is pretty high. But to give you a frame of reference, that was about as high as our entire, like, this Simon's KMLM switcher, I believe right now is in UVXY. Yeah, so all 100%. So we have those across the board, but we also have total or other allocations, right? So a lot of bond stuff in there, some sector weighted stuff in there as well. But anyhow, I think this tool is pretty cool. There's definitely some other stuff that I've done behind the scenes, such as like Monte Carlo simulations and yada yada yada. But I think I have a good amount of faith in this. I've said that quite a bit. I think this is probably the most research I've done on anything in my entire existence of investing. So I have a good feeling. Now there's potential that some of these are overfit. And if that's the case, then we can simply swap them out and keep the other things all equal weighted as well. That's the luxury of this thing. You don't have to say in the long term. We can try to adjust as well and do a whole bunch of other weightings to see what can we do to get low volatility, low drawdown, but also a high annualized return. So anyhow, guys, that is it for me. And yeah, hopefully I don't blow up the portfolio this week, especially with Vixie being about 50% of our Composer portfolio. I don't know. It's not been doing too hot recently, or the shorts on VIX. So anyhow, that is it for me. And yeah, as always, I wish you guys a wealthy future.